Hello and welcome to the channel. Bitcoin is down. Are we breaking? That is what we're going to look at in today's video. We'll also have a brief look at Ether and Solana and oil, and why I look at oil when we are crypto channel mainly, I will explain later. A quick reminder, no financial advice on this channel. In this video, just me hallucinating as an AI, or maybe not artificial intelligence, just human intelligence, or maybe no intelligence at all, who knows. We will start in the chart, then I will come back to the question by using the macro models I'm using. Are there any signs of Bitcoin breaking, meaning that is this correction deviating from the path it has been on so far or not? But first, if you look onto the charts, this is so annoying. Someone keeps buying Bitcoin. We're so close to try out the liquidation area below here. Because that is really what I want. I want to see what happens if we dip our toes in here a little bit lower, at least 1,000, 2,000K lower than previously. Because that will give me the answer to if there is still more downwards movement to be done or not. Because it's not until we have liquidation and that create a red candle forming fast, people get panic. How will the buyers defend this? How will the market react? So now we still have this unknown area just below us. We do not really know how the market will react if we hit it. And I've been talking about taking out this low over here all the way since we were up here. But you do not always get what you want in the chart. So this means, from my point of view, and as a reminder, the financial advice, but from my point of view, this is still a little bit of an undecisive situation since we didn't dip our toes in there. It literally is, or could be, a minefield. And we simply need some people to run around there to figure out if it is a minefield or not. And unless someone is doing that, we still don't know. With regards to trading setups, I'm coming back with that tomorrow in my members video. In contrast to Bitcoin, you can see how Ether, and this is also daily chart, Bitcoin was also daily chart, already had been breaking down. It already had taken out this liquidation level here and established itself in a quite narrow channel below. So it has a different structure than Bitcoin, even though they are correlating, because correlation only shows if things go up and down in a coherent way. It doesn't account for the amplitude, which many people do not understand. For example, if I draw a line like this here, and then I draw something like this above here, these two could have like a 99% correlation, but the amplitude is different, and that you only see if you look at the covariance, where you do not scale things. And Solana has done also exactly the same. And unfortunately, or fortunately, I don't know, but we did take out the lows, and it didn't catapult down. We did have a reversal at a quite decent level. However, since these two following Bitcoin mainly, I don't think we can tell or say too much about this. We need Bitcoin to dip its toes down in its liquidation level to see how it behaves. It's a little bit annoying, and please, if anyone can find this for me, I am pretty sure this situation we've had before, where Ether and Solana do dip down and create a channel below the original channel. I'm pretty sure I've seen it before, but I didn't find it when I looked for it, because I wanted to see what was the outcome last time we had this setup. So if anyone recognizes we've had this setup before, well, if you can be so kind to write in the comments. And most altcoins that have a correlation with Bitcoin, most larger altcoins look the same as Ether and Solana. Then we have smaller ones that is just all over the place as usual. But I want to have a look at oil, and it's very easy to be smart retroactively. But if you were on this channel, you might remember how I said I'm going to buy here and stay in it for like a week, no more. We did get a breakout and somewhere here and sold. Not because I knew it would be pretty much the top, but simply because it was very much upside in a short time frame. And in this level here, I felt that the downside and upside are quite symmetrical. You want to buy when you have an asymmetrical upside or downside if you're short. And then the next thing we noted was that these channels here, these upward sloping channels, started to tilt to the right. As I said, this is a pattern that can tilt, which means eventually we start to tilt down. And this is exactly what has happened also. And in my humble opinion, this is easy to see when you draw the channels like this. Otherwise, I don't think we will have spotted it that easy. Now, what is could be interesting with oil is, of course, the pressure in inflation and what impact that could have on interest rates and so on and so forth going forward. So therefore, I see the pattern of oil. That's something that at least half long term, we will talk months to quarters, should also benefit Bitcoin. Also, and just fun effect, when I got the question, how do you know oil will not go higher, Patrick? And I said, I actually don't know. But one reason that I was a little bit ambivalent if I should sell or not after that first week, because everything was just going straight up. And then some politicians stepped out on TV and said that oil will be between $150 and $200 within a few weeks. And when politicians say things in the country I live, it never happens. They're always completely wrong. So a simple way is to just bet against them and you should do well. And I'm basing this on like 30, 40 key observations I've had since I started to be interested in markets and trading, or interested. I've worked with it for many years. So when they promised us some years ago that interest rate would not go up because inflation will keep being low for a foreseeable future, for the first time in my life, I locked my loans on the houses. Usually I have the interest rate floating, but I locked it for 3 years, and that was a really good decision. Then they said that energy would not be an issue because people were warning before the war in Ukraine that there could be an energy crisis because of the geopolitical situation. They also said this is just some conspiracy theories by extremists. So I also locked my my electric price for the first time ever for 3 years. Now these 3 years have expired, but it was a very enjoyable 3 years to do the opposite of what the politician promise or recommend or think they know. So I was joking about that a lot here and said we can't hit 150 200 because the politicians here in Sweden said we will. And well, so far it seems that they once again are very anti-correlated with the true nature of life. Well, enough about that. The next question, how is this correction or bear market or what we want to call it comparing? Is anything breaking, so to say, or is it different? Have we caused some damage by this few of this red candle here? Well, my way to assess this is to use the inverse Euler equation, a line that we've been following in previous corrections as well. And as you can see, I've also dotted out the 95% confidence limits here. And as you can see, we are oscillating up and below this model line, and we are within the confidence limits. So really nothing extraordinary, quite something to be expected. This is a daily chart, so I don't think the daily close today, which is probably a bit lower, is in there. But regardless, we are just within it. Looks just perfectly normal. And if we compare to previous bear markets where they also been following the inverse Eulers, but with a different slope. This is a little bit, you can compare it with a straight line. A straight line can have different slope. The commonality is that they are straight. And the commonality with Eulers for exponential function or its inverse for an inverse exponential function is that the slope and the angle of the slope change with the predefined amount. However, the fit of the slope is then adjusted to the data, so it's a semi-empirical model. And we concluded here quite early, before 100 days from the top, because what you see down here are the days from the top, and they all have been synchronized, harmonized. They all start at the same level as this top at 126, I think it was. So this is where we would end up if we were following 2022, which would have taken us down to 32 if we would repeat that. Or if we follow 2018, we will go down to 20. But so far, for these 250 days, they are statistically significant. You can do those kind of tests when you have these kind of models. So this time is different. This time is statistically different so far. We cannot promise anything about the future. Anything can happen in future. But we can say with mathematical certainty that so far these are different, they are not the same. And if the projection would hold, which the statistics cannot promise us, well, then they will also end differently compared to the other. This was also true for the bull market, which also, from a statistical point of view, were different compared to previous ones. So is it broken? Well, not yet, at least. Thank you for watching today, and please comment, share all those things, and hope to see you all soon again.